Hi students, good evening again. In the previous lectures we were discussing about the break-even point. The same topic we will continue, and here we have a last concept related to the break-even point. That is the concept that if there is more than one product that is related to the company, so the multiple products are there. So multiple products means what? That for example, the company is producing 2 products, 3 products, 4 products, or maybe hundreds of products. So in that case, how to calculate the break-even point. In the previous lectures or in the previous examples, we have calculated for the single product. So here we will discuss that how to calculate the break-even point for the multiple product. So what we need the one extra information here. The same thing, for example, this company has a 3 main products. They have a laptop, they have a mobile phone, and they have a tablet. And the price, the assumed price are like a $50 is the price, here $40, $30, and the variable cost is 30, 20, and 20. Now, it means we have the basic information like a sale price is there, the variable cost is there, and also we know that the fixed cost for that period, is how much? That is $16,000. So this is the basic information. But here what we need one more extra information that is related to the ratio of the products. Means that is the combination of the product. For example, here it is a 40% laptop, 20% mobile phones, and the 40% that is the tablets. So it should be, the total should be 100%. So this is the ratio. Means out of the 100 products they are selling, 40 units are laptop, 20 mobiles, and the 40 tablets they are selling. So this is the extra information that we need if there is a multiple product for the break-even point. So first of all, we will calculate the simple contribution margin. So that is how much? 50 minus 30. So obviously it will be 20. 40 minus 20, it will be 20. And 30 minus 20, it will be 10. So these are the variable costs. So we got the contribution margin 20, 20, and 10. And this information is given like a 40% laptop sales, 20% mobile sales, and 40% tablet sales. So what we have to do, we have to calculate the weighted average contribution margin. Simply, we have to multiply this contribution margin with its ratio or the percentage. Now 20 into 40%, so answer will be 8. 20 into 20%, the answer will be 4. 10 into 40%, so the answer will be 4. So what we have to do, we have to add these 3 to get the weighted average contribution margin. So we have a contribution margin for individual product, but we need a weighted average contribution margin by multiplying the contribution margin with the percentage or the ratio given. So 8 plus 4 plus 4, so it will be $16. So $16 is the contribution margin, the weighted average contribution margin. So the basic formula for the break-even point is what? We have a fixed cost divided by sale price minus variable cost, or in a simple words, the fixed cost divided by contribution margin per unit. But here we have a more than one product. So what we need? We need one contribution margin or more than one contribution margin. We need a weighted average contribution margin. So the weighted average contribution margin is 16. So the fixed cost is 16,000 for that period. So the break-even point, and again that the break-even point will be for all the product as a combination. So we have a fixed cost divided by contribution margin, weighted average contribution margin. So here we have the fixed cost of how much? 16,000, and if we divide it with the 16, so the answer is 1,000 unit. So the break-even point is the 1,000 units. So they have to sell 1,000 units, but 1,000 unit of which product? Laptop, mobile, or tablet? No, it is 1,000 unit of all the products. So now we need one more calculation, that how to calculate it. We have to consider that 40% is the sale of the laptop. So this 1,000 unit is for all the product. It includes the laptop, it includes the mobile phones, and also the tablets. So 1000 unit as a combination or a total of all the product. Now again what we have to do by multiplying this value with the ratio. So the contribution margin we have calculated, the fixed cost we have already given. So the break even was 1000 units for all the product. But out of these 1000 units, 40% should be laptop. So it means how many units of laptop we have to sell? 400 units of laptop. 20% mobile phones means 200 units of mobile phones, and here again it is 40%, so 400 units of the tablets. So we have a 3 break-even points for laptop, for mobile and tablet. For mobiles it is 20%, so out of 1000, 20% will be 200 units. So laptop is a 40%, so 1000 unit is the total, and the 40% will be 400 units of this laptop. And then for the tablet again it is 40%, so 400 units. So 400, 200 and 200, and if we combine all these, the total is 1000 unit as a break-even point. So this is the break-even point, not a single break-even point. It is for the multiple product. So for laptop we have a different break-even point. For the mobile phone it is a different, and for the tablet it is a different. So we have a 3 different break-even points. It can be more than 2 products, it can be 100 products. So the same formula can be done, and it can be calculated by using this ratio. So we have to first calculate the contribution margin, simple. Then by multiplying the ratio or the percentage, we have to calculate what? We have to calculate the contribution margin, the weighted average contribution margin. Then we have to divide the fixed cost with the contribution margin weighted average, and then what we get will be a break-even point for all the products, the combined break-even point. Then again we segregate it according to the percentage, like 40% here, 20% here, and 40% here. So this is the answer. 40%, 20% and 40% means laptop 400 units, break-even point. To achieve the mobile phone it is 200 units, and to the tablet it is 400 units. But here the problem is, obviously there is more than one product. The ratio is not fixed, but it is assumption that we have to keep these ratio fixed. The fixed cost again will be same, it can not change. Again the variable cost, the total variable cost means the 30, 20 or 20, it will be not changing. So these are the assumptions we are considering, like these things are not changing. So if other things remaining the same, at that point we have to sell these number of units to get the break-even point of more than one product. So this is the concept of the break-even point. If there are multiple products, I hope you have understood the concept, and still if you have any confusion, you can ask me in the comment section. Thank you very much.